Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, February 22nd, 2012 is sponsored by Realtic. All right, let's get right into the mix today, folks, as the markets are trading slightly lower. Initially, we saw a flat open, choppy action for the first hour to hour and a half, then a nice early, or I should say early lunch sell-off, late morning period. The markets came in, touching the 200 moving average in the green trend line, and that was the low of the day. And again, every day we seem to have this kind of sell-off at some point, although over the last couple days we've seen it happening a little bit later than usual. And what I mean by that is this: if you go back over the last 2 months to really the beginning of January 2012, the market seemed to only sell off in the morning session. Over the last couple days, we're seeing the sell-offs happen later in the day. Yesterday was in the mid-afternoon period before a little bit of a late-day bounce off Apple's surge. And then today, it seems more of a midday sell-off, and now we're floating neutral to higher again. So again, just something to note here. I continue to kind of unveil to you guys the cracks in the glass or in the ice within the market that are showing up now as we get, more extended on the daily charts. A couple other factors I want to note. I talked about this yesterday. I think it's a very important factor. The SPY hit a high of 137.05 yesterday. That was not a new 52-week high. If you go to your daily chart and zoom out, the 52-week high was actually 137.18, and that was hit on May 2nd, 2011. So the reason why I draw that attention, is because essentially you would expect a strong market to take that level out, at least on an intraday basis, and that did not happen. So that's kind of one of those little weakness areas, and now I'm watching to see if at some point we surge back up to that level and take it out, in which case then obviously that's a strong move. But right now you have to wonder, as the markets are stalling at this little double top, what the catalyst will be for the next move up. In addition, I thought it was interesting yesterday how the Dow inched above 13,000 for literally 60 seconds and then just got slammed down as sellers came in, and it looked to me to be institutional selling that was driving the market down. In other words, once it hit that level, computer programs from institutions had a trigger sell button, and they just pressed that button and knocked it right back down and unloaded some positions at that 13,000 level. All right, so again, this is your daily chart on the markets, and you can see again we came right up into this high yesterday, didn't quite take it out on the SPY, which mirrors the S&P 500, and since then we pulled back. We're down 23 cents on the SPY today. Dow is down 9, Nasdaq's down about 8.5, and S&P's down about 2.4 points. All right. Now, what are we seeing on the charts today? Well, a couple key chart setups. One thing I'm watching Caterpillar very, very closely on the daily chart. Now, Caterpillar had a beautiful double top, and this was a good short we talked about in the intraday stock chat. I gave it out to our members in there, and they made some great money. But just look at this in terms of a day trade. I know most of you guys are probably swing traders, but again, for day traders, look at this perfect double top. Yesterday, you hit this high, sold off. Today, you went right back to that exact level and then sold off. And imagine knowing to short it right there at that pivot top and thinking about the profits you're making on a quick little trade to the downside over the course of 10, 20, 30 minutes. It's a great trade right there. But bottom line is, the bigger question is on this daily chart as we're extended on the Caterpillar chart. And again, just take a look at the lows from October. You were trading essentially $67 per share, and you're now at $116 to $117 per share, no more than 4 or 5 months later. But if you zoom out, you have to note the double top from 2011 right here. And that level should yield some sort of resistance point, and it looks like we're already stalling there, but I would expect a little bit more of a pullback off this level on Caterpillar. So that's one of the key charts I'm looking at as a possible short candidate. Now let's talk a little bit about shorting this market. Right now, volume remains light. You have to be very careful on short side. My partner and I here at InTheMoneyStocks.com, there's a master cycle level coming up, but it has not arrived. And based on that, we have held off from shorting the market heavily, while most other trading firms out there have been shorting and just getting crushed. And again, basically right now, 15% of my portfolio is short the market. All right, that's it, 15%, leaving 85% either long or in cash inside of this market. And the reason why we knew not to take heavy short positions is essentially because the cycle date was not for quite a while. Many people wanted to short in early January, mid-January, late January, early February, mid-February, and now again at late February. And all I've done is pick and choose. I nailed the short on Apple last week for 25 bucks on the downside. And there are other shorts like Microsoft nailing the top pivot by finding these master levels. And the one thing I want to make clear is, assuming we use the methodology to find these shorts, we're going to nail the top regardless of whether or not the market's going up. That's the beauty of it. Now, if the market falls and we short the stock, it's obviously going to give you more of a reward than just a smaller reward. But either way, the master levels are the master levels. And for those of you that want to check this out, there's a 7-day free trial here at the Research Center at InTheMoneyStocks.com. It's called the Research Center. It essentially gives you an inside look and proprietary analysis on the markets. And you will get trades, you will get proprietary techniques to use on analyzing stocks, you will get videos every single day, alerts when we take trades and so forth. It's an exclusive group here, only meant for the best of the traders out there, the swing traders out there that are willing to open their mind and learn from us. And that's the key, folks. I don't want someone who's a piker, to be honest. If you're a piker, you don't belong in our service. If you're genuine in terms of understanding the markets and you want to learn and you want to make money for the rest of your life, not just get fed by a fish here and there, but you want to actually study and be able to do this on your own for the next 100 years, should you live that long, then this is the place for you. All right, and again, it's the Research Center here at InTheMoneyStocks.com. Website is InTheMoneyStocks.com. The Research Center is for swing traders. The Intraday Stock Chat is for day traders, and we give a 7-day free trial for you to check it out. All right. Now, going back to a couple other charts, another one that's intriguing me is MasterCard. This line doesn't mean a whole lot now. It was a great little base back then, but the MasterCard chart is a great chart. If I go to the monthly chart on MasterCard and I zoom out, I want to show you this level here, folks. All right. What you can do is you essentially take these low pivots and you stretch it through. And what you see right here is that you're crossing this area up here. This trend line, connect this trend line through this pivot high, and you're hitting this area today. This is giving me an idea that we are near a good shorting opportunity on MasterCard. I haven't entered the short here, but I am watching it very, very closely. If you're a member of the Research Center, should I take it? Of course, I will alert you to that trade, give you my exact entries, exits, stops, targets, you name it. You get it all. All right? So that's another stock I'm watching very closely for a possible short. Again, the key is understanding when the cycle date is, and based on that, what you want to do is you want to step back and get close to that cycle date. When that cycle date hits, you will see this market sell off, and it will sell off big. Until then, they're going to float this market neutral-ish to higher on light volume, on hope and greed, and the amateur retail investor finally coming back in the market. So you can still make a little bit of money on the long side, especially in some small cap names that I've given my members in the Research Center as well. There's some small caps that are still very lucrative in my book. Taking a look at a couple other things, Apple obviously is one we want to be watching today, as this is one of a major, this is about 20% of the NASDAQ 100, so it has a huge influence on the NASDAQ and the S&P 500. And sure enough, Apple's kind of had some selling early, then it popped up to the positive side, then more selling, and now it's slowly grinding up with the markets and basically on the flat line. In terms of Apple, what are you looking for? Well, I was short this, and I made $25 on my first half of the short within 1 day, by the way. 1 day, $25 profit on the short side of Apple. Not too many people can say that. But now, as it came up here, or as it's coming back up, my next shorting opportunity is going to probably be at this double top. And I'll evaluate it there. Ideally, I want to see that come into the time cycle date and coincide. Because, frankly, if the market's going to drop, Apple must drop too. There's no real way you're going to see Apple dropping or going up and then the market's dropping. They're not going to go in opposite directions very much, if at all. Okay, one of the stocks I gave out yesterday in the small cap realm, I'll just touch on, is Plug. I gave this out yesterday right here at $2.30. Today, look at the breakout. This was a perfect chart pattern. Breakout, it's trading at $2.57 right now. So again, just to give you an idea, we do large caps and small caps. I don't discriminate, frankly. If I can make money on it, I'm trading it. That's the basis. And if you don't believe that, then I don't even know what type of trader you're trying to be. But if there's money to be made, I will trade it. Absolutely, in the stock world. Small caps, mid caps, large caps, ETFs, I don't care. Show me a good chart pattern, price pattern time. Let me use my proprietary analysis on this thing, and we'll make money. All right, guys. Again, 7-day free trials, all you need to know. Come to InTheMoneyStocks.com. Sign up now. Be ready for the cycle date. It's coming, folks. Oh, it is coming. And the money is going to flow like water to the pockets of our members. Take care.